Hey, Alpha Fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sea of bright red on the crypto charts. We do see a continuation of that pullback and that profit taking in the crypto verse over here. Guys, let's just take a look at why that is. Of course, we can see that, inflation did come in hotter than expected. And, this is basically something that the chart has been front running as the market, noticed on their own that prices were higher than what it would, be expected should inflation be going down. And so the PCE data did actually reflect that on Friday. And that's why we're seeing a continuation of the pullback on the charts. Here we see the PCE index, which is really important inflation numbers for the Federal Reserve. It's 0.6. Previous was 0.2. Not good. Core PCE is a 0.6. Previous was 0.4. Not good. Expected was 0.5. Not good. Okay. So, and here's really one of the thorns in the paws here. Okay, is the PCE year over year. It's 5.4%. The last year over year was a 5.3%. You want to see this number going down. You don't want to see it going up. And same thing with the core PCE year over year, 0.7% over compared to the previous measurement of 0.6%, and expected was 4.4, and that would have been just what would have allowed the Fed to be hands off. But this number, 4.7, not good. The market is suddenly thinking that the Fed is going to increase. 75% of the market, in fact, believes that the Fed's going to increase by 25 basis points. About 25% believes that the Fed is going to increase by 50 basis points. If the Fed does nothing, which would be unusual, the market could just skyrocket. If the Fed does 25 basis points, the market could pump a little bit or hold its lows, check its lows, hold its lows. And then, of course, if the Fed does 50 basis points, we could retest our kind of macro lows even, and this could be very dangerous for the markets. So, guys, we do have to keep our eye on this Fed narrative just a little bit longer, as we can see that inflation really hasn't been squashed. We are in that stagflationary period where there's no real recession, but also the inflation really hasn't been beaten, and so we're kind of going back and forth between the huge macro parties like the different Federal Reserves across the world and 200 different countries, the liquidity coming out of Asia, the tightening in the West, all of these things in conflict, and we just have to see who wins. Okay, guys, and that is, of course, reflected in our charts. I'm not going to do any fancy measurements today. Let's just use our EMAs. You can see we're squeezing to the downside here. Ultimately, could we go as low as 21,000? Maybe, that wouldn't violate this low over here. But right now, we're looking at 22,500, 22,000, and then that 21,000. Those would be the three numbers that I would be paying attention to the most. Guys, this is just at the bottom of our range right now, our current price. So, in the past, this has been a good place to buy. And, if you're just playing a range, then this wouldn't be the worst spot to take, some risk, assuming that you're risk managing down here and you have your stop losses wherever you'd like them to be according to your own risk management, not financial advice, of course. Should the bears take control somewhere around 20,500 ish, then they could drop this thing all the way down to those macro lows that I was talking about, and that would probably go hand in hand with a very hawkish and aggressive Federal Reserve. Maybe just a kind of neutral to light-handed Federal Reserve. Maybe we could just kind of do some checkbacks and then perhaps continue to go. Or who knows, maybe we're range bound for multiple months, and maybe this was the limit on that move. Guys, I have been talking about a potential limit on this move for several episodes, okay, warning you that this could happen even while we were pumping. And of course, I mentioned that the crown jewel had a God signal to the downside when we started to turn around after that first pullback. I did say that there would be a limit on how high we were likely to go, probably around 60 to 70. We did end up tagging the 70 number, and now we're doing the pullback. This is very normal stuff, on momentum trading, and so I just see a continuation to the downside right now. I can't really be short-term bullish. We do just have to continue to be on this bearish watch, even if overall we are bullish, even if overall it looks like we may have put in a bottom. We just have to be on our guard. That's trading for you, right? Of course, we can see that also in the RSI, where we're doing something similar like what we did back here, right? We kind of pumped up into the bullish control zone. We broke down, kind of made a little bit of a double bottom formation, pumped back up to the bullish control zone, and then doing kind of a check back. Now, are we going to be able to put in a little bit of a low here and then pump back up, sort of like what we did here? Well, that's what we're looking out for on the RSI. Is this going to be a higher low, or is this going to be a lower low? And are we going to continue to break down? Of course, all those drives of bearish divergence weren't helping us, and we are seeing, of course, that push just going forward right here. Let's go ahead and take a look at our volatility, which we've been following. So the volatility has been threatening to flip all the way back since here, and indeed it did flip. So that volatility used to be pushing us to the upside. Now it's threatening to push us to the downside, and it could be a long journey. So we do have to watch for the next volatility flip. Guys, we did officially get a flip, so we crossed the EMA here, and we crossed the stars ribbon right here. And so I am going to call this one as we are officially in a volatility push to the downside. So I can't really take any long positions personally until I see volatility start tapering off. That's just part of my strategy. Even if we look at the price action, we did have a nice buy wick off of this tagging this support here, even though we are at support. And so, guys, of course, a buyer beware. We're not really in danger of falling to hell. We do have a couple levels of support under us, but it's just a very precarious situation. And right now, this structure up here is looking very similar to this structure up here. So there's no reason why we can't just boomerang, right? Like the charts do that all the time. So just be on your guard and make sure that you know what you're doing and what risk that you're taking. Finally, I do want to take a look at the ADX. We can see that the intensity of the DI negative move is pushing up as it has crossed over with the DI positive. So bears are gaining control there. The ADX hasn't really popped up this pink line, so we can see that the intensity of the move really isn't there yet. But sometimes this is a little bit of a delay after these crosses. So if that ADX, that pink line, does start pumping up, then I'm going to be a little bit more concerned. But as long as everything's just pointed down, kind of in this 20s area, then we could just be talking about consolidation. So not really too worried yet, but I am on guard. Of course, we can take a look at our MACD. And we did get a couple of those nice juicy blue days that I was talking about when we did put in that curve initially. But of course, these things come back around, and now we're doing the same thing with the red. Is it going to be just a tiny little red hill, or is it going to be a big red hill? Nobody knows. That's why we pay attention and check back every so often, right? That's why we have so many episodes. Guys, we can also look at our Stokes. Our Stokes is pointed down. If we do have any volatility push, it is going to most likely push us to the downside, okay? So there's not like a random chance of us spiking up. It's going to have to be something that moves the market. I am going to leave it there. No fancy levels for you today, just using a good old-fashioned analysis. We can see that on the 4-hour, we are getting a little bit of a bottom-like structure here. So we are going to just watch to see if we can can hold on to this 4-hour 200 EMA the way that we did over here. It could take a while, but I can see that the bulls are really trying to hold on to that 4-hour 200 EMA. And that could be a tough nut to crack. That could send us back up to 24,000, 25,000, or somewhere in those neighborhoods. So again, bulls are still trying, and maybe if we just kind of zoom out a little bit, we can see that. Yeah, I mean, I just it's well, we do have a little bit of the possibility of volatility flip on the 4-hour. But yeah, I mean, there's a chance. I'm going to give the 4-hour bulls a chance to let this play out, see if we can get a little bit of a bottom structure here. Wouldn't be the worst time to take some risk in the market, considering that we have been in this channel for so long and the bottom has just held pretty well, including this wick right here, and we haven't just plummeted to hell or anything yet. So if you do want to take some risk, not financial advice, but just make sure to also manage your risk because of those bigger issues that I was talking about. And it could pay off, but anyway, right now the macro is a little bit precarious. Okay, so this thing could get sent either direction. Just really depends upon the news. So, all right, guys, I think I'm going to end it there. That was your alpha for the day. Stay safe and happy trading.